Welcome to the Wealthy Money Property Podcast, your ultimate resource to unlocking your inner property guru and building a property investment portfolio. Now, introducing your host for the show.
Property magicians, how are you? Welcome to episode 128. Yep, the 128th episode. You've just joined us. My name is Vangile Makwakwa, and I am the host for the show. I help women of color heal ancestral money trauma so they can double their income and live their best lives. You can find me on Instagram, LinkedIn, and Twitter under Vangile Makwakwa. Find me under Wealthy Money on Facebook. And with me is my incredible co-host.
Hey, Dan. It's been a minute. Welcome to episode 128. And hello to my listeners. I am Dr. Miranda, Prop Doc Mom. Find me on Facebook. My Facebook page is Prop Doc Mom. On Instagram, I'm Dr. Miranda _Prop Doc Mom. I'm a property mentor and a doctor by day and a mom. Love property to bits. And today is that incredible day where we have a fintech company in property. It's been, we haven't had many of those. I'm very excited about this one. And you're going to have a treat.
Guys, you are in for a treat. I heard about Mizo's interview on the Property Magician Stockfile WhatsApp group. I was minding my business somewhere in Panama. And I think it was when I was in Costa Rica. And people were like, look at this, Mizo is on Metro FM, guys, tune in. And she was having an interview with Tim. And Tim Akinusi is the CEO of mortgagemarket.co.za. And they do some incredible stuff, guys. They can help you go from where you are as a first-time home buyer to owning properties. They can work with you around financing, education, etc. It's incredible. This entire podcast has been eye-opening.
It is. And we love how their company is set up because it speaks directly to the aspirations of this podcast. We started with we're going to educate people of color about property. And we just keep coming across people who have the same aspiration as us. So it's very, very inspiring.
Yes.
So take a listen. And get a notebook, by the way. Get a notebook. You're going to need some stuff here.
Definitely. Guys, this is incredible. So without further ado, we give you Tim. Hi, Tim. How are you?
I'm very well. And yourself, eh?
I'm fine, thank you. It is lovely to have you on the show.
Thank you for having me. Yeah, it's good to be here.
Yep. So before we start, we love to ask all our guests to tell us who they are as a soul, as a person, and then tell us what they do for a living. So introduce yourself to us.
Yeah, that sounds like a really deep question. Who am I as a person? I'm a young man. I still think I'm young. I'm like 38. I come from, I'm of Nigerian descent, but I've spent the last 30 plus years in South Africa. So I'm a South African citizen, and I have a family of two, wife, and we live in Johannesburg. And I've been in Joburg for the last 16 odd years. And, here's where I started my career, my corporate career, when I finished my varsity. And I've worked for several companies, predominantly in the banking space and financial services. And more recently, in the last 12 odd years in home loans, where I essentially used to run the front end or call it the top line of the home loans business. That was sales, client value management, and everything to do with how products are created for customers to consume in the home loan context. And yeah, I've done that up until 2018, when I then decided to hop into the world of entrepreneurship and started my own company called Mortgage Market, which essentially is a marketplace for home loans. We help give the ordinary South African just unrestricted access to all the lending banks out there, in a way that they can make comparisons, in a way that they can effectively get the best rate, the best loan to value, and then we pay them 5,000 cash back for self-serving. And we've done that for the last 3 years. Yeah. People think they're the foolish ones who are paying away a lot of our revenue, but for us, we believe fundamentally in a shared value model. So if customers use our platform to get their home loan, we'll get them the best deal and effectively pay them 5,000 Rand when their deal registers. So yeah, we've been doing that for the last 3-4 years. It's been a wonderful journey. We have given so many South Africans the gift of being able to purchase their own homes. And yeah,
incredible.
Yeah, it's been worthwhile, but hasn't been without its struggles, and obviously having to deal with COVID and getting through, this 1 in 100-year scenario that we found ourselves in literally 2 months after we had launched.
Wow.
Yeah.
that is so crazy. I've got multiple questions already. Right. So first question is, how did you end up in the mortgage space? How do you come into the mortgage space? How did you end up in the property space?
Right. Well, I would say it wasn't always by design, but I think the things that I'd done in the early years of my banking journey sort of led me there. So I got started when this is just after the global financial crisis had hit. And I left Nedbank to join a life insurer where, essentially we were helping them move into a digital age, helping them understand how they could engage with customers online and sell insurance policies online. And I had done my MBA at that stage, looking at the barriers to entry for banks in terms of being able to penetrate more customers using the internet. And at the same time, whilst I'd finished my dissertation, I got a call from a headhunter saying that the Nedbank home loans business were looking to go in a different direction to where they had gone in as far as how they originated home loans. And they wanted to use the web to do so. And could I come in to start this business? And I said, yeah, I just finished my thesis on it. And I said, let me jump in. And this was literally late 2011. And I then came on board and I started this digital channels where customers could originate home loans end to end through the bank's back-end operating systems without having to have any human intervention whatsoever. So I didn't understand the product of home loans, but I understood, how the design and how a product needed to be launched in an online world. So that was my start. And the key thing that we looked at was how do we create an experience that limited people's levels of anxiety as to whether or not this bank would give them a home loan or not. And we were able to do that literally within a couple of hours. So we launched that product at the end of 2012. And that was my start in home loans. So I started to learn the business and learn the product and the industry. And it just became more and more exciting every year as I went on. And I've fallen in love with it for the last 12 plus years.
Wow, this is amazing. I'm really, really fascinated. Okay, so Tim, this is so interesting what you've just shared. I'm really, really fascinated because a lot of my work is around emotional intelligence with money. How does one, this is just out of pure interest, how does one reduce anxiety with regards to people applying for mortgages online?
Yeah. So, I guess when you think about how we all react to the idea of buying the place that we want to have, right? There's we see ourselves in this place. We start to romanticize and fall in love with what the new house is going to look like and how our lives are going to be, right? And then after that, the next emotion that you feel is, oh my goodness, am I going to be able to qualify for this place? And that's the next thing that people have to reconcile themselves with, right? So one of the things that we've done to date is that we've built what is called a pre-approval capability that allows individuals to literally within 2 minutes get a good sense of what their credit score is and what their affordability is, right? And because by doing that, you then have a lot more confidence about how much property you can actually buy and how much property you need to, look to acquire, right? So you now have a more realistic and measured perspective, going into your property search. And that's a vitally important stage, because if you skip that stage, then you end up in a space where you are just looking for property for the sake of looking, and you're indulging, and you then run the high risk of being let down when you find out that you either don't have the ability to afford it, or there's something wrong with your credit status that you need to look to repair before you can get back into the journey of searching for this place. So it's always best to ready yourself by getting pre-approved first, right? And I think that reduces the levels of anxiety tremendously, and then allows you to then focus in a much more responsible manner about, this is what I can afford. And then you can get excited knowing that you can make that prospect of buying this place a reality, Yeah, so that's the way I would see it, right? And I mean, just thinking back as to when we started back in 12, when I was at Nedbank, one of the key things we wanted to weave into that value proposition was, how do we create a product that the speed of response back to the customer on their affordability was such that they just absolutely limited their sense of anxiety, because they knew that this bank was at least going to give me the home loan within a couple of hours. And that was pretty much the value proposition that we hung our hats on, when the rest of the market was giving people feedback like within a week and a half, which I mean, it's quite a long time to live with, the anxiety of whether or not you can, get the place.
Definitely.
Right. So you take that and then you compare it to where we are now, where even before you start looking for a place, you can immediately understand exactly what you can qualify for, which is the natural first step, into buying your place. Yeah.
Yes. Wow. And I'm sure back then it was very innovative. Now it's something that is much more standard, but I'm very interested, for someone listening here, how can they, if they're a first-time home buyer, we have listeners that are very experienced investors and listeners that are new to the market. How do people increase their chances of pre-qualifying and being approved for home loans?
Right. So I think the first thing as a first-time home buyer is, we've come a long way, right? In the past, there was this perspective that you needed to have credit to get credit, right? You needed to have a credit card, and you need to have some level of debt before you could, then look at, purchasing something like property or applying.
You mean that's not true? This is exciting news to my ears, because I don't own a credit card.
Exactly. And it just felt a little bit counterintuitive. Like, you want people to acquire good debt, but you have them starting off with bad debt first, such as credit cards, clothing accounts, etc. And the reason why it was done back in the past was that all the banks are trying to do was to establish whether or not you were able to make consistent repayments on smaller debt. Because if you could do that, then they could trust you with bigger, debt commitments, such as a home loan. But now, the analytics has been, far more advanced, right? Where as a first-time home buyer, you're not saddled with that obligation to have other debt. You can actually, as a first-time home buyer, they can trust that you have the right affordability, and they can lean on the house that you're buying and where you're buying as more of a surety, right? And so they're able to trust that and give you, even if they allocate you a default score of 1, as opposed to 650 and above on your credit score, they can now still advance you that home loan because you're a first-time home buyer, right? So that becomes something that you can do. The other part of your question was, how can individuals improve their chances of getting a better score, right? Pre-approved, right? So the good news is that you first just have to establish what your credit score is, right? Which is literally by using the app that we have, which is it's literally a tool that asks you to put in what your income and expenses are and your ID number, because Experian already has your ID number attached to any type of credit or any type of repayment that you've done in the market using the credit system. And they will then allocate you a score based on your history with any form of credit that you've had currently, right? And if there's no form of credit, then they'll look at things like, have you taken out personal loans? And they will look at the extent to which you've taken out a number of personal loans. And obviously, personal loans being like, call it the worst form of credit. I think we all know that, because it's the most expensive credit that an individual can get, right? It's even much more expensive than your credit card or your overdraft. It's never a good sign when you have too many personal loans. They will not afford you a great credit score if you are exercising multiple personal loans. It becomes a reflection of the fact that you are now relying on personal loans to fund your everyday lifestyle. So you want to limit any personal loans being on your credit profile. An overdraft is fine, and a credit card is still okay to use. But as much as possible, don't pay the minimum on your credit card. Try to pay it up completely. That's always a really good sign that you have a good relationship with credit. And then your affordability is what it is, right? It's about what you earn, what your expenses are, and what your surplus is, which gives you a sense of how much new credit you can take on, or how much new debt, rather, that you can take on.
I was going to say, so what I'm hearing you say is actually, we've believed for a while, and we've had people on the show come on here, and I've also been carrying this erroneous belief that you're having a credit card is very important in terms of your credit score. But what I'm hearing you say is that it may actually be important to show that you can save and that you've got discretionary income after you've earned money. So build up your savings, and those savings can actually help you in future.
100%, especially if you wear or have the profile of a first-time home buyer, which means that you have never registered property before, right? If you start with the practices of having a savings account and having, call it a good amount of unused income lining your bank account. I'm not saying lots of it, but some level of income at the end of the month. Those are good signs that you are cash flush, and you are not geared to the hilt when a bank starts to look at you for your first house.
That is really, really fascinating.
It is.
Hi, Mizo.
Hey, hi. And hi, team.
Hello, how are you?
Good to see you again after your travels.
Yes,
Oh my goodness.
It's been a while since we caught up, right?
I know. I was looking forward to this appointment for so long, and then I'm the one who is like coming in late. Yeah,
It's all good. Life happens. We understand you're a busy woman.
There have been 10 moving parts on the same day, including car service. But thank you for coming. Are you talking about mortgage market and how you make people qualify?
Yes.
Yeah. In part, yes.
In part.
He's
In
helping
part.
us understand the importance of savings more than having a credit card. Music to my ears, obviously.
Of course. Yeah. But that is good to hear because when you hear one track way of building your credit score, that's when we get into trouble, isn't it?
100%.
Definitely.
Yeah. I think it's probably something that hasn't been publicized enough that there are different ways of enhancing your credit score. And I think it's about understanding that not all debt is bad debt. There's some really bad debt and that you shouldn't, take on. And then there's some really decent one, right? So, if, of course, property is what we're here to speak about, but, the quicker you can get property as your primary debt that you take on, and the quicker you can make constant repayments on that, right? You will be better off on your second and third and, fourth property, et cetera, because banks will have had a demonstrated level of track record on good debt that you've been able to make consistent repayments of. So they will reward you for that in your next purchase, that rather than, an M4 or a massive Range Rover that sucks up a good 60 to 70% of your income, which is where we, by and large, find, a lot of consumers, especially consumers that earn well, so, yeah.
Yes.
Yeah. It's painful. It's very painful to talk about that, team, because, you can't take your house everywhere.
Sure.
And your 26, 27, 29-year-old, the first thing is they need and want to be seen a certain way. So it's good to have someone who just puts it in perspective. Start with a house, a mortgage, even if it's not your dream house. Maybe that's the other thing. Maybe that's the other important part. Yeah.
Yes. No, I firmly believe so, and I think it'll be remiss of me to not say that I didn't fall into that same trap when I started working, right? So, my first experience with property was literally probably about 6 or 7 months into my first job. By then, I'd already bought an Audi A4. It was like one of the top of the range ones, and it was black with lovely mags and all that. And I was a young 22-year-old. I had a really great job. Yeah, and I started young. And I recall going to a launch of a new development in Sunning Hill that was selling these things off plan, and they were selling them for about 349,000 rand. And because I had spent half my salary, in fact, more than half my salary, on my car, I couldn't afford to make repayments of, I think at that stage it was probably 5,500 to 6,000 rand, given where interest rates were on this place. And by the way, I came to that show house or to that launch, not the Saturday that it launched. I came on the Sunday when phase one was already sold out. And for literally the same size bachelor pad, I was paying 395,000. So it had gone up by like close to another 50,000.
No.
And I couldn't afford that phase. And only to find out that, a few short years later, probably like 18 months later, my salary obviously was doubling as I was progressing. And I could have actually paid off that house with my next bonus check. And I lost out on that. And then had to buy something that was maybe close on, I think at the state was about 600,000, my first townhouse in 4 ways. And I didn't buy it off plan. So then I had to now take out a personal loan to pay for the transfer cost and the registration cost. Now, those are things that I wish somebody would have told me, that I shouldn't have bought a place from an existing owner. I should have rather bought it off plan, where a lot of that transfer cost and registration would have been included in that purchase price. So another lesson that I that I learned the hard way. One was I had too much debt being the car at that stage. And secondly, as a first-time home buyer, I went and bought a place that I had to pay cost on when I didn't have to. So I learned some expensive lessons. And I think my passion now is just to make sure as many first-time home buyers don't have to learn the hard way. One is by obviously, not having too much car in their, in their basket of debt. And, number two is do not buy houses, off of somebody else unless you are buying a really big house that you can't afford, to get off plan, basically.
Yeah. Wow. So Tim, my question then is, what makes mortgage market? Are you really just dealing with first-time home buyers, or the rest of us are also included in the mortgage market? What makes it so special, or what makes it different from a bond originator? Why mortgage market?
Right. So, it's a good question. I think the first thing I would say is that, first of all, is that we're not exclusively bond originators. Mortgage origination is one of the things that we do. Right. So we are a platform. We're a marketplace for home loans, and the home loan is getting access to the home loan via our platform is one of the key things that we provide. But before that, we actually ensure that you, as a first-time home buyer, are equipped with an understanding of the entire process. What you're going to go through when it comes to the purchase of the property, and what you're going to go through as a homeowner thereafter. So we're very big on buyer education. We're very big on equipping you with the tools. So so one of the tools that we're big on is to say, how do we ensure that you understand just how much home you should be buying, right? Which is our pre-approval capability, where we pre-approve you first, and we look at your credit score, and we can advise you on how to improve on it. And we can also advise you on how much of a house, or how much you can spend on property. So,
I see.
Fundamentally, by doing that, we already are putting you in a space where, as an informed home buyer going into that purchase, you know exactly how to value property correctly, right? You know what to look for, right? You know that if you're going to buy a place, let's call it a house that's worth R1 million, that you know how to make an offer on that place. Given that we give you information about what similar properties have sold for in the area, right? Through a property valuation report, and also will tell you whether or not that's the right property to buy, given all the amenities and everything about it, right? So now you're equipped with understanding how to purchase a place, and then once you've gotten that, past that hurdle, then we can say to you, okay, let's get you the best deal across all the various banks.
Absolutely.
And in the past, people have just merely trusted that their primary banker will give them the best deal. Well,
that's
the good news is that, whilst your primary banker can assist you with increasing your overdraft limit, or, making changes to your debit order, etc., they're not often in a position to give you an understanding of the best deal because there's only one lender, right? In order to get the best deal, you have to be able to compare apples with apples. And that's where the origination aspect of our business comes in, is that we'll give you the tools to make a single application to all the banks in real time, where you can then compare multiple quotations. And by comparing these quotations, you can actually negotiate better, because you're seeing, your primary banks give you a rate and an LTV, and you're seeing what other banks are prepared to give you, right? So therefore, you can always make sure that you can make that comparison. And if one bank is able to give you a lesser offer, or an offer that's better than your primary bank, you can take that quotation back to your primary bank and say, somebody else is prepared to give me a better deal. And that this also involves moving my accounts over, because they will lower the rate that you've given me. Are you prepared to actually better that? Now that gives you leverage, right? And so, so just to put into context, right? A 0.5% saving on your interest rate over the life of the bond can save you as much as 80,000 Rand. Right? Now that's cash that you don't have to be saddled with, because you're getting a much better deal at by being able to arbitrage or being able to compare deals across banks. And then the second part of that is that because you're using our platform, we will actually allocate you 5,000 of the commission that the banks pay us for originating your deal. We will pay that back to you on registration, and it's 5,000 cash that we pay straight into your current account or any account of your choosing. Now you can do anything with that,
That is really nice.
When I heard that, I was like, that's crazy. I'm not understanding. Let's take it a step back. So mortgage market has on the back end, it's an agency that looks for houses for you. It is a bond originator, and the banks are speaking to you and offering your clients better service.
100%. And you will always have a service advisor who will be able to guide you through the entire process, who will help you make sense of the quotes that you're seeing. And then even after that, right, we are also able to provide an after sales service where if you come back to us a year later and you want to apply for further credit, or you want to restructure your bond, we can advise you on what to look at and how to go about doing so. So this journey of home ownership is not a short one, and so we want to be there for you as a homeowner, to be able to give you the A to Z of the entire process, not just origination, but it's the advisory, it's money back in your pocket, and it's making sure that you're getting the best deal on this journey. Because it's a home, getting a mortgage is a 20 to 30 year commitment, right? So you've got to make sure that you start off with the best possible deal to ensure that you can save as much money as possible. And I mean, we think that that's a necessary service, given that, the education levels and information levels of all things to do with property is not really that high, especially for people of color. Given our history, our history, we need as much information up front, especially when we're dealing with long-term debt.
So this is really fascinating, Tim. I wanted to find out about, now this is what applies to most of our investors on here. People are sitting with their first home, or maybe even the second or third home, and they've never gone through a refinancing process. Can you please take us through how you would work with them? So someone has no clue, they've never gone through this. How would you work with them? What are the things that they need to get ready when they can see you?
Right. So if you're looking to refinance your place, right, that's always a good place to start to get capital. Because in many cases, it's about saying, how do I get a re-advance or how do I get cash from the equity that I've paid off, right? So let's say you've had a house for 5 years. It was worth 2 million when you paid for it. Two things are going to happen in that case. Your house would have appreciated in value, and you would have also paid it down, right?
Yeah.
So in that case, you would simply go back to your bank and say you want to get a readvance against your existing place and your existing mortgage. So if you're looking, so say 500,000 when your house was worth 2 million 5 years ago, two things will be true is that you can actually get a property valuation report from us to demonstrate to the bank that your property has increased in value, right? So we would be able to get that. And then secondly, because you have already got equity in the place, they would expect that you can get access to that equity as well. And it's a much shorter application. It's a much shorter application because they already have all of your details. All they'll be doing is to understand whether or not you can afford the new repayment amount if you take out this further amount. And if there's a further registration to be done, which in many instances shouldn't be done, if you are not having to take out a further loan. If you're taking out a readvance, then it's without registration. You don't have to pay any cost to any attorney to register a further bond on that place. But if you are taking out a further loan on top of your existing loan, then there will be a small fee to be paid for registering that larger loan amount.
Right? Yes, sorry, Tim, you just used big language. You talked about there's refinance and there's readvance. You lost us. Sorry.
Okay. All right. So a readvance. So a readvance is basically saying if my initial loan was for 2 million and I've paid up 500,000 of the 2 million, then I'm simply going back to the curve. I'm simply going back to the start. So I'm going back to 2 million. So I'm accessing 500,000.
Yes.
Right.
Yes.
All right. So that does not require any further registration. You can go back to your bank and they can advance you that 2 million back to the curve. But if you are taking out a further loan, so you want to take out more than 2 million, you want to take out 2.5 million, right? Yeah. What the banks would do is that they would need to register a smaller bond over and above the 2 million. So you'd be registering 500,000 extra, right?
Yes.
And if you've already paid 500,000 down, then effectively you are now looking at R1 million advance.
Yes.
Right? Does that make sense? You look at R1 million advance.
And sorry, I was going to say, and the refinance is the one that depends on the appreciation of your property value.
Absolutely,
right?
absolutely.
So you have to look at how much value you've added onto the property. Okay, fantastic.
100%. Yeah, and then they will do two types of valuation. One is a desktop valuation, which is easy to perform because they're looking at data of other similar properties around the area to say, are they now all worth 2.5? So is 2.5 reasonable as a security, right? And if for whatever reason they can't establish that value, then they will send out a physical valuer to go and look at your place and see, have you made any upgrades to your place? Have you, enhanced the value of it? And if that is found to be true, then they can still value your place at 2.5 or whatever the amount that you are looking for. And then they will advance you the funds.
That is amazing. So how old is mortgage market and what sort of clientele do you have? Do you have a whole range of ages and different people? And does it,
Sure. So we launched the business literally at the heart of COVID. So we are 3 years.
Really?
No. We are nearly 2 years old. Right. So 2020, 21, 22. Yes. Yeah. If we launched in 2020, we are 3 years old. Yeah. Nearly 3 years old. And we have been making an impact in the market. We have done more than 2,000 home loans to buyers ranging from affordable housing buyers all the way through to people who are looking for 10 million rand home loans. And we also have advanced our business in that we are not just in the business of property advice and giving tools for pre-approvals and access to the banks, but now we're actually helping property developers be able to construct how they're taking new products to market, right? How they're taking new homes to market, helping them understand how to price these homes, helping them to understand the demographics of that area and the valuation that they can get when purchasing land and when starting new development. So we're effectively in the consumer intelligence space. Then we help them with the marketing. We assist on the selling side, and of course, the origination. So that's been fascinating to expand our service range, as partners to property developers in helping them understand how they take a property to market and how they get the customers and get them the financing for these units.
This is incredible. So I am very, very fascinated. Would you mind going more in depth as to how you work with property developers? Because that is a bulk of our listeners.
Right. So it's been a fascinating journey because many property developers don't often keep the ability to take and package a product, to market. They don't keep that capability in-house. They often outsource it. And so this then became an opportunity for us to actually find the right property developers that were buying land in good areas, in areas that were going to appreciate, in areas that had great amenities around it, that we could say, you know what, if you built in this area, individuals will start to realize the property appreciation from the moment they purchased it, right? Which is off plan because the houses would take roughly between 12 to 18 to 24 months to build. And by that time, these homes would have appreciated in value, right? Once we found the right developer, we would then partner up with them and help package those products, help do the pre-valuations to make sure the banks will find value in the products that they're going to be building. So if it's going to be an area that's that can accommodate 100 units, each at R1 million, right? We will make sure that the right amenities are put into it and make sure that we get the right valuations from the banks so that when we find the right potential buyers, either investors or people who wanted to buy to live, that we know that they're buying a place that the banks are seeing value in, right? And we know that they're buying a place that would appreciate in value. So that's what we've been doing. And it's allowed us to manage our distribution in a much more predictable way. And it's also then now spun off an interesting business where we can actually buy property ourselves because we see them at an early stage in the development cycle. So, you asked me earlier on to say, am I accumulating property and have I, do I have a property portfolio? I'm starting now to build a really strong investment property portfolio because I can see property before it even hits the market. So I'm able to negotiate and get a really good price because we work with the developers directly, and we're able to then take on investing in these units before they even hit the market, knowing that they are good value for money and they're likely to appreciate in value given the construct of that development. Is it in a good area? Is it got good roads, good network of schools, hospitals, etc.? All of those things that we know help property appreciate and get a really good yield from a rental perspective.
Which is how I got to meet Mortgage Market. I didn't know you. I met Mortgage Market before. My mom lives in Orlando, so and my favorite thing is looking around for property. And we had just come out of, I don't know whether we were coming from Mall of the South or something, and there were people handing out pamphlets of Mortgage Market, because I don't know whether you are selling on behalf of the developer next to the power station. in the
Yes,
power
yes.
area. Yeah, those
Yes.
flats. And they are
Wow.
gorgeous, right? They are beautiful. And I was
Yeah.
looking at that price. I'm like, I cannot believe in Orlando you can buy an apartment for 600,000. What do you mean?
Yeah.
Right?
Yeah.
Wow.
Yeah, we are partners up with Rybax and Urban Dev, who are the developers in a construction house, and effectively, what Orlando Towers Estates is going to be is the first lifestyle estate that is no different to any other estate in like four ways, right? It's going to have quality finishings. It's going to have good amenities, and it's in the best area naturally in Soweto, right? It's literally
Yes.
across the road from the Bara Mall. It's down the road from UJ. Bara Hospital is 2 Ks away. Ponya Mall is less than 5 Ks away. So it's got all of those, those natural amenities that help property values appreciate. And of course, it's across the road from the famous Orlando Towers, where Chuff Pawsey is, which is a nice, social, leisure destination for people to just hang out. And so when we looked at that, we were so excited by that, because for the first time, if we were able to launch a product like that in the township, that will start to transform the property landscape, that will start to give people saleable homes that in future they could resell for a much higher price. And at the very least, right, they would get a really good rental yield from them, because there's so many people who don't want to travel 20, 30 Ks to get to their place of work, right? So if you're a nurse, like you work odd hours, right? Why not have why not live, right in Orlando Towers Estate, when you can get to your workplace literally within 15 minutes, as opposed to an hour, right?
Absolutely.
Yeah, but obviously it doesn't come very, very, it doesn't come without the right sacrifice. And when I say the right sacrifice, is that as a developer, to be able to build something like that with the right quality, you have to be willing to take less margin than you would in a different development, right? That's more upmarket, because you need to be able to meet people at a price point that's affordable for them, right? And of course, if you stick in this for long, then you're able to sustain a business over a long period of time. And that's what this developer has done, is that they have put in the right quality, and they have taken less margin to be able to meet people with the right pricing. And that's why you can get a 2-bedroom at 670,000 Rand. I mean, that price is unheard of in this market, right? For the amenities that you're getting, for the finishings that one is getting, that's an amazing price that they're able to get. And of course, the 3 bedrooms go up to 938,000 Rand. Yeah.
That is incredible.
Yeah.
So were you guys involved from the start with this developer? When do developers get to come in and partner with you? As they're thinking of buying the land, before they even buy the land?
No, we fortunately got in at the stage where we were looking at constructing the right pricing, like figuring out what the pricing needed to be, and figuring out how much we could, build for, given what we had at that stage. So that's when we joined. And once we figured out that we could build at a price that we could resell these units under 700,000 for a 2-bedroom, then we knew we had a really good product on our hands, because naturally the place is just amazing. The area just is the right one to be able to launch a product like this that we know will appreciate. It's not in a remote part of Soweto. It's got access to, good road networks. You can get back to the south. You can get, towards town, towards the north. And it's accessible to, a lot of key economic hubs around the area. And typically that's what helps property appreciate in value in the long run.
Wow. This
Yeah.
is really, really intriguing.
And it's flown so far. I mean, on the first release of 136 units, we have sold 100 and we sold 134 already in the last 4 months. So we'll be releasing the next phase. We'll be releasing the next phase in the coming, probably by early next year, maybe by Jan. We'll be releasing the next phase, which is great. We also have a really good deal with investors. So if investors are looking to buy up multiple units, we're able to also work out a package for them as well.
That is exciting news. So
that is very exciting.
It is. It is. So mortgage market is driven by data. Is it and you purely stay online, or is there a personal touch? What I'm trying to understand where mortgage market came from.
Oh, absolutely. You cannot, as much as we are a fintech business and we're technology driven, we are not void of the human touch, because in a product like property that is so emotive, people need to speak with people. They need to know that there's a human being on the other side that gets what they're going through. So that's why we have service advisors and we have partners across the country that is able to speak to customers, answer any questions they may have, advise them through the journey. What we then use is technology to deal with the mundane things and to deal with the administration to make it a lot seamless, right? Our entire process is paperless. If you don't want to use paper, if you don't even want to have a conversation with anyone, you can do it in the comfort of your own homes. On your mobile phones, you can make your application. You can do a pre-approval on your smartphone. It's web-based as well, so you don't have to download an app. And we will always have somebody to speak to throughout the entire process. So it's a perfect blend of the human touch and technology. And that's what makes us unique. What I will say is that we are very big on educating people across the board. So, we want to make sure that when you are getting into this thing, you have full transparency, you know what you're getting into, and that you can sustain it. Because property is it's not a quick fix, it's not a short-term thing. We want this to be a wealth creation driver for everybody, right? We want you to be in a position where you can turn that home loan into an instrument where you can use that equity that you've paid off to access cheaper debt down the line, and that's super important for us. Yeah.
Oh, wow. That was my next question to ask. Do you guys then educate people on that? So let's say someone comes in, they don't qualify, right? They've got the income, they've got everything. Can they then contact you and say, please work with me for the next 6 months or so to ensure that I can actually qualify?
Absolutely. Yeah. As long as they have a passion to say they want to become a homeowner, we will help them through that journey, and as long as they're willing to put themselves in a position to deal with whatever negative credit situations they find themselves in, we are able to put in place the right tools for them to get them on the right track, and then go and fight for them and get them the best deal across the banks.
And this applies to someone who's also trying to get refinanced or get an advancement or anything, right?
Yes. We would advise them. We would advise them, and of course, the process of getting refinanced, you already have the relationship with your bank. We'll at least advise them on what to look out for and how to get their property valued correctly in order to get the re-advance there. But for a first-time home buyer who doesn't know where to go and how to start and what to look for, those are the people who we started this business for, right? We want to be in a position to ensure that they are well equipped and that they have a really good experience and not a negative experience with buying property, because a negative experience obviously can turn people off. So if you start off on the right foot, then you're on your way to creating enormous wealth using property. You're on your way to buying the right first property, second one, third one, etc. And that's why we work with property developers to keep a lot of attractive stock on hand where you can always get in before we even hit the market with the next development.
Okay.
Wow.
Yeah.
Loving this. Loving this.
Seriously loving it.
Loving this for our people. And I'm just appreciating the fact that people were not sleeping during COVID while we were busy sleeping. Oh my gosh. Yeah. And at the risk of outing you, you can tell me if it's within bounds to talk about the fact that you are extending the business so that we get everything under the same roof. Are you
Absolutely.
ready to talk about that or not?
Well,
I met you. Mm-hmm.
Yes, we see ourselves as being an ecosystem for home buyers, right? So the next progression is, how do we get you the best insurance, right? The next progression is, how do we get you bridge and finance when you need some funding to be able to pay for transfer costs and transfer duties? How do we get that to you at the best possible rate that is far cheaper than the market because you're already a client of ours? And that then leads to how we are looking at expanding our services. Obviously, it does take a lot of investment to do that, but we believe it's the right thing. And the moment we're able to do that, then we'll create a full-on ecosystem where it'll be hassle-free for you, and we will just get you all the help you need and all the finance you need to make your property dreams a reality. Yeah. But watch the space for that, and hopefully we can bring that in Q1 next year.
Good luck.
Wow.
Good luck.
Yeah.
Interesting.
That is
Thank you.
incredible.
Yeah.
That is incredible. I don't know, Ben. Do you want to take mortgage market further? This is so interesting. I'm excited about all sorts of things.
I feel really full with this. I feel like we got such a great education around mortgage market. I'm very, very fascinated by this. I want to say, Tim, what I love is how you're educating people. How, taking a first-time home buyer and showing them how they can turn that one property into an asset that can get them more properties. I wish that had been on the market when I was a first-time home buyer.
Yeah, I wish I had that too. That advice would have saved me a lot of money in my earlier years. But
I'm known to speak about the shiny stuff. Everyone that marketed anything to me at medical school, it was the credit card and the shiny stuff. I speak about it all the time. I'm known to talk about that.
They got me too. They got me.
We are the change we've been waiting for. So I feel very energized by what you guys are doing, and this is exactly what our people need. And this podcast, in combination with what you are doing, is exactly why we exist. I think I found my purpose, not the other place
100%.
where you found it.
100%. And by the way, Doc, when you came on Property Explained on Metro the other day, they absolutely loved you. They loved your story. They loved your authenticity. And they were like, it was like I was saying, one of the things that we need to do very soon is a full-on masterclass, an evening to invite, aspiring property owners and just anyone who wants to get involved in this space, where we can unpack it, with a lot of time and with a lot of empathy for the questions that people have, the confusions they have, to be able to clear that out. And to really just, make sure that when people are getting to the space that they're going to benefit down the line, there's something about property that, we should definitely do that. But I just want to commend you, for taking this on, because I got so excited that all I wanted was, Doc, you got to come on Property Explained. Like, just in case people...
we met for 30 minutes at my workplace,
Yeah.
and we were on Teams, and he was like, right, that's it. So what are we doing? Let's exchange podcasts. And
100%.
it was, but Radio Metro was incredibly fun. And I almost felt like it was maybe tops, 8 minutes tops, right? It's not more than that, but it was so good.
Wow.
Yeah. It was.
Wow.
Yeah.
That
it was
is incredible.
so good. Yeah.
Oh,
but Tim, thank you for this. Shall we move on to the next segment of the show so that we can organize?
Please.
On to the next segment of our show, magical feedback from our hosts, where our hosts share their 3 takeaways from today's episode.
Okay, so guys, welcome to Magical Feedback. In today's episode, Miza will start us off as usual. So, Miza, over to you.
My first takeaway, I love books, guys. I love books. And the book that Tim is sharing about and his reason for loving Shoe Dog. Shoe Dog was written by the guy who's the founder of Nike, the Nike that we all are raving about. And the reason why he likes it is what caught my attention. He says, this guy doesn't tell the fairy tale story of an entrepreneur because the fairy tale story of how I came from here to there doesn't teach or doesn't help anyone. Underline, the fairy tale story doesn't teach or help any entrepreneur. And guys, that for me is such an important thing where you want the authentic story, you want the grit, you want the sweat and tears and the success story, right? Because that's exactly, the road to expansion is like that. It's up, it's down, it's rough, and it's stormy, but it is a journey that you just don't give up on. Yeah. Love that.
Yes, definitely. Wow. I love this so much. Oh, I love that. So my first takeaway is, obviously, this is going to be my favorite takeaway, is that you don't need a credit card to increase your credit score and to be able to afford a house, guys. What I loved that Tim said was, you don't need to go create debt. There are other ways that we can increase our credit score. And what he said about that, we hear this one story and this one way, right? But you cannot increase your affordability by just increasing your savings. Isn't that so much better than telling people that they need to go get credit cards, that's the fastest way to do stuff and to increase your credit score? To be able to increase your chances of affording a house. Yeah.
And this is my thing. Whenever we are told one story, we are told just a single story. It is a book that Chimamanda Ngozi wrote, The Danger of a Single Story. If you are given a single story and enough people repeat it, and then it becomes, and it's not true that it's only the credit. Yeah. And he says, that's going to be my second takeaway, actually. He says, get into good debt as soon as you start working.
Yes.
Get into the good debt as soon as you start working. I'm just imagining if I had bought that flat in Hillbrow when they were still 150,000 instead of buying the car, right? So you get into good debt, build, because I've never not paid my debt. None of those shiny stuff that were bought and then I couldn't pay them the installments. I could have, surpassed the GTI and bought property first, right?
Right.
Man.
I mean, honestly, but Lisa, why is it that the GTI gets more marketing and airtime everywhere you go than the property does? Instead of being told that if you buy property, the properties can pay for the GTI, you know? We're not told that.
That is my thing.
So this is so sad, right?
It is insane.
Yeah. My second takeaway was what I love about mortgage market is that they allow you to compare what you're being offered by all the 7 different banks, right? So the 7 different banks, you can compare, and then you can start negotiating with them and playing them off each other. This is so absolutely incredible. So really, really love that, because that's another thing that you're not taught. You're not taught that you can negotiate interest rates and negotiate with the banks. You're only taught that the banks give you this amount. You can't, you're not taught that you can go and say, listen, one bank has given me this, can you match it, or can you get me something better? So I really, really love that.
Really like that. I really like that. But what I like even more about fintech, which is my third takeaway, mortgage market has set itself up in such a way that I really like. It almost feels like the value chain of your acquiring a property, most of it, and the scary bits are taken care of inside of mortgage market.
Yes.
Hey guys, the offer to purchase, the qualification, do I qualify or don't I qualify?
Yes.
I get to qualify. There is coaching in there, right inside of mortgage market. And then you've got bond origin. You even have, it's almost like you have a sourcing agent, someone who says, no, don't buy there. The market that's going to sell and that's going to appreciate is over there. So you are having agent coach. You are having bond origination and soon possibly insurance for your mortgage right in there. I feel like the method as well is, I'm blown away.
It's a one-stop shop. It's really a one-stop shop. It's absolutely incredible, right? My third takeaway is just the way that they are collaborating with different people in different industries, just the importance of that, right? So in essence, it's touching back on that point, is that I could start off as a first-time home buyer, but maybe in a few years, I have an inkling to become a developer because now they've taught me everything. They will partner with me and hold my hand to become a developer. And I loved what he said about how in certain markets, you're going to take less in terms of gross margin. Your gross margin will be less, but you are supplying so that you can offer at a higher quality people in that market. So you can service people in that market at a higher quality. But that means, that doesn't mean you don't make a profit. So profitability and doing good and offering good quality housing doesn't actually, it's not something that is, how do I say, it gets to work in tandem. It's not that if I'm offering something that is relatively affordable, it's got to be terrible quality. So I love that. They also about housing with dignity and really offering great quality at the lower end of the market. Love this.
I love it. Can I just say, it just feels like I share the values, and this podcast shares the values of mortgage market, right?
We do.
And we tell this story a little bit, that we met for 30 minutes at my workplace, and instantly we exchanged numbers, and we promised each other that we would exchange podcasts. He said, come on mine first, come on mine first. And that's how I ended up at Radio Metro in the morning. And that's just what I like. When you meet your people, you meet your people, right? It doesn't even take do, right?
Oh my gosh, I love it. This is amazing.
I really love this. Wait to see what all of us can create. And It's a lot of fun doing this podcast. I love it.
It is actually. And
Yeah.
guys, without further ado, we go to the journey to magical expansion.
Yay!
Now on to the journey to magical expansion, where we ask our guests the same 5 questions we ask every guest.
Hey, property magicians. So we're back, and Misa's going to start us off with this segment as usual.
Right, team, this is the favorite part of my show because I'm a nerd. Please tell us if you've got one book that changed your life. It can be a fintech book, it can be a property book or general business. Even if it's a fable story, it's fine.
Right. One book that I read as I started my journey as an entrepreneur that really helped me was Phil Knight's book, Shoe Dog. Yeah. Oh, what an amazing read.
Dog.
Yes.
Have I heard of it?
Yes, they've mentioned it before on the show.
Yes,
I can't remember
yes.
who.
Yeah, Phil Knight's book, his story of how he built Nike.
Nike, yeah.
I absolutely love that book. Right.
Oh my gosh.
Yeah, because it wasn't one of those books, and I must say this, I've been very dissatisfied with how, a lot of people who make it, how they tell a very fairy tale story of how they made it. And I say, that look at me fairy tale story doesn't really help anyone.
No.
You need to tell people of the ups and downs. You need to tell people of the rough patches, because that wisdom and that storytelling of the difficulty is where we all come unstuck, is where we all give up in that valley of despair. But if you tell authentic stories about that, people can resonate and realize that, they should keep going because there is a light at the end of the tunnel. So I really loved Shoe Dog. It gave me a lot of inspiration. It's a beautiful read. I need to reread it again. And the other book that I read was called Unscripted by MJ DeMarco. Unscripted by MJ DeMarco.
Yeah.
What an amazing book.
DeMarco is the what millionaire? What is it?
Yes, he wrote The Millionaire Fast Lane. Yes.
Fast Lane. Yes. Millionaire Fast Lane.
Yeah,
okay.
You should check out Unscripted. Yeah. An amazing book. I've read it twice already in the last 2 years, but those 2 books really were key books that gave me a lot of insight and a lot of inspiration.
Okay.
Oh, wow.
Yeah.
Awesome.
Awesome.
So, Tim, what keeps you inspired?
What keeps me inspired is just seeing the impact that we can make, for me, I've learned to recognize the privilege that I have, the privilege of being a young man who was given a lot of opportunity very early, who gained a lot of experience and who operates at the apex of my industry. And with that, I felt I had a responsibility to move the industry of real estate forward, and not just to benefit and participate from it financially. And by that, I mean, I could have sat in a bank, for the next 20, 30 years, knowing how to do my job with my eyes closed and continue to cash in, versus being able to say, how do I step out and how do I try to move the industry forward by creating tools, by creating, areas where we can educate people, by trying to improve the industry with more knowledge and understanding of how more people can get involved in owning property. And that's what inspires me every day, is seeing first-time home buyers go on to turn property into not just a shelter for themselves, but also an asset vehicle, a vehicle for creating wealth for themselves as well as their future generations, and that's what inspires me, honestly. Yeah.
Okay, love that. So Tim, are there, I know you've shared one or two, but are there any other things that you look back and think, oh gosh, I wish I had known this before I started my entrepreneurial journey? Are there things that you could rewrite? You could script?
I must say, from an entrepreneurial journey perspective, I didn't have too many regrets, with how I started it. I wish I'd started it sooner if I had the opportunity to have done so.
Sure.
But I think God's timing is God's timing. I think the timing was
Sure.
at a point where I could really give it a really good go. So I won't even say I wish COVID hadn't happened, because I think I learned so many lessons through COVID. And and if anything, I wish I had started my property journey a lot sooner. I wish I through the years had committed more of my disposable income into paying down property and buying more property, rather than all the other things that I acquired that were of a consumption nature. So that would be it for me.
Oh, that makes 100 of us. Yes.
Yes, definitely. What do you think you still need to learn, Tim, in property?
Well, I think I need to learn to continue to be open, continue to have keep an eye out for new trends, continue to stay humble and stay connected to people, because when we think we know it all, that's when we start to fall behind. So just to have a mindset of being able to continuously learn about what people are going through, because that's how I can improve my technology. That's how I can improve on coming up with more innovative ways to simplify things for people. And that for me is something that I want to never lose sight of, is my ability to stay humble, stay hungry, and continue to learn. Yeah.
Totally.
I love that.
My last one is, what resource do you want to leave with our listeners? It can be a YouTube video, it can be your favorite website, it can be whatever. You've shared a book
I would
now.
say, right. I would say, from July this year, when we started Property Explained on Metro, we managed to have a lot of those video clips put onto our YouTube page, our Instagram page. Please go check it out, because it is very short, easy to consume, literally 2-minute videos of key insights around all things property. They'll be very insightful for you. And if you find that useful and you want to delve deeper into it, you're able to reach out to us and ask us any question, and we'll be able to answer those questions that you might have. So that would be the one resource I would say. Either go to mortgage.market on our Instagram, or go to Property Explained on Instagram. That's the handle, and all of the videos are there. They are easy to consume, and we've done a good number of them to really be insightful for you.
Like that. I like it. Yeah. And you'll find me there at mortgage.market, by the way, on Instagram.
Okay.
I saw myself the other day.
Yes.
Is it Mortgage Market on Instagram?
Mortgage.market on Instagram.
.market on Instagram.
Mortgage.market on Instagram.
Yeah.
Okay, so Tim, what was your intention for coming on the show? Why did you say yes?
Well, I thought it would be great to have a really good conversation with my fellow property enthusiasts such as yourselves. And I felt that it would be good to, just share a little bit about my journey and talk about where the industry is. And hopefully this will be the start of a number of conversations that we'll have where we unpack various aspects of property in relation to investments or tax or first-time home buying, or how you build your portfolio, how to trade out of a bad property investment, etc. Yeah.
Sure. That's
what I thought I would get out of it.
This is absolutely awesome. So how do people get hold of you? I know people are listening and are like, I want to be part and parcel of this. So how do they get hold of you?
Please visit our website on mortgagemarket.co.za, or hit us up on Instagram or on Facebook. Instagram on mortgage.market, and Facebook is Mortgage Market SA. Chat to us, have a look at the products that we have a look at the developments that we support. We'll be able to give you really great deals on them, and of course get you the finance to purchase these things and pay you 5,000 Rand cash back. Nobody else in the industry is giving you that value back, but we're prepared to give it to you because we fundamentally believe in a shared value model, and we want to partner up with you in your property journey.
I like that.
Wow.
That 5,000 bit really destabilizes my mind. I don't even understand it. But just a quick one, that there was one guest of ours who shared something when they came onto the show.
Right.
Another way of using that 5,000 is for your before they register the bond. Let's say you buy a house for 500,000. You can just ask them to pay that 5,000 into your mortgage summer already.
Yeah.
And it reduces the bond that they're giving you instantly, because it goes now to, like, we just said there, we're like, what? She says, yes, even if it's 1,000 Rand, just pay it in, because then your mortgage becomes the 4,499.99 cents. Like, that's how things work.
100%, it adds up.
So amazing, right? I like
100%. 100%.
I like that.
Every penny counts.
Okay.
Yeah.
Every
It
penny
really
counts.
does.
Yeah. Tim, you've been amazing, and yes to that masterclass. You are onto everything that Vangile and I have been planning to do. So let's just do this thing, really, guys.
Awesome.
Yeah.
Let's do it. I'm looking forward to that.
Thank you so much, Tim. You've been a treasure. You've shared some incredible knowledge. Thank you, Mizon. Thank you, Property Magicians. We shall see you guys in the next episode.
Thank you so much for having me. I appreciate it.
Cheers, Tim.
Cheers.
Cheers, Tim. Thank you for listening, Property Magicians. My name is Vangile Makwakwa, and I am your host on the show. I help people heal their ancestral money stories so that they can fall in love with their bank accounts, become financially free, and live their best lives. So if you would love to increase your income, or you'd love to pay off your debts and increase your savings, contact me. You can contact me on the Wealthy Money website at wealthy-money.com. Again, wealthy-money.com. Or you can email me at vangile@wealthy-money.com. Again, vangile@wealthy-money.com. Find me on Facebook on the Wealthy Money group or on the Wealthy Money page, or find me on Twitter and Instagram as Vangile Makwakwa. Now over to my co-host.
Thank you for listening. I am Dr. Miranda Doc Mum on all the social media platforms, on Facebook, Twitter, and Instagram. I'm the host of Property Magicians podcast, and I'm a property mentor. I mentor newbie property investors to help them to begin and to take action. Your journey into property investment begins with me, from property registration, from property company registration, to picking the correct strategy that suits where you are at. Find me on my inbox at miranda@wealthy-money.com. Again, inbox me at miranda@wealthymoney.com if you want me to help you start your property journey.